Hi everyone, welcome back to Finance Plus Plus. We're continuing to cover the basics of the stock market, perfect for those of you who are just starting your investment journey. Don't forget to hit that subscribe button and ring the notification bell to stay updated with our latest content. Let's continue. Investing in the stock market involves risk, as the value of stocks can go up or down depending on various factors. To manage risk, it's essential to diversify your portfolio. Diversification means spreading your investments across different industries, company sizes, and geographic locations. This helps reduce the impact of poor-performing investments on your overall portfolio, as well-diversified investments are less likely to be affected by a single event or market trend. There are different approaches to investing in the stock market, but they generally fall into two categories: long-term and short-term investing. Long-term investing focuses on holding stocks for an extended period, allowing your investments to grow over time. This strategy is based on the belief that the stock market tends to increase in value over the long term, despite short-term fluctuations. Short-term investing, on the other hand, involves buying and selling stocks within a shorter time frame, often based on market trends and technical analysis. This approach includes day trading, swing trading, and other speculative strategies. As a beginner, it's generally recommended to focus on long-term investing and build a well-diversified portfolio. To make informed investment decisions, it's essential to understand the basics of fundamental analysis. This involves evaluating a company's financial health, management, industry trends, and other factors to determine its intrinsic value. Key financial ratios, such as price to earnings, (PE) ratio, price to sales, (PS) ratio, and dividend yield, can help you compare and analyze different stocks. By researching and understanding these metrics, you can make better decisions when selecting stocks for your portfolio. Now that we've covered the basics, it's time to create your investment plan. Start by setting clear financial goals, determining your risk tolerance, and deciding how much you want to invest. Then, research and select the stocks that align with your goals and risk tolerance. Remember to diversify your portfolio and focus on long-term growth, and don't be discouraged by short-term market fluctuations. Investing is a journey, and with patience and discipline, you can achieve your financial goals. And there you have it, the basics of the stock market explained. We hope this video has given you a solid foundation to start your investment journey. If you found this video helpful, please give it a thumbs up, share it with your friends, and don't forget to subscribe for more content like this. If you have any questions or suggestions for future videos, leave a comment below. Thank you for watching, and happy investing!